I'm going to take you inside this hearing now. What we've been waiting for is the opportunity for the four witnesses to speak. And we really think this will be the meat of the matter here. The questions and the answers going back and forth. At issue is government spending and what the IRS did between this period of 2010 and 2012. Who knows what happened before 2010? But get this, in 2012, the White House came out and said, on behalf of, the government, no agency can spend more than $500,000 on any singular conference, which still is it's a lot of loot.
It's a lot of money anyway, right?
But what the IRS did in the 2 years prior blows your mind. They spend $4 million in Anaheim, $3 million in Philadelphia.
That's not easy to do.
$1.2 million in San Diego, $1.2 million in Atlanta.
I think you got to work hard to spend that kind of money at those conferences.
They flew 2,600 employees to Anaheim, California.
I'm trying to figure out why you need to fly anyone anywhere in the IRS. I mean, seriously, why do you need to fly or travel in this position? I have no idea. And Congressman Cummings, moments ago, saying of the Star Trek video, he says, I have looked at that video over and over again, and I swear I do not see the redeeming value in it. So we're going to play that for in a little bit. But here is J. Russell George, who did the Inspector General's report that started this whole ball of wax rolling. Here he is.
Pointed out an estimated $49 million for 225 conferences during the 3-year period of our review. The conference in California was held at the Marriott, Hilton, and Sheraton hotels in Anaheim in August of 2010 at a reported cost of $4.1 million. The Small Business Self-Employed Division of the IRS conducted this conference for an estimated 2,600 executives and managers. As required at the time, the conference was approved by the 2 deputy commissioners of the IRS. We could not validate the accuracy of the $4.1 million conference costs because the IRS did not have effective controls to track and report those costs. $3.2 million of the conference costs were paid from unused funding originally intended for hiring enforcement employees. Instead of using the required IRS personnel whose job it is to search for the most cost-effective location for the conference, the IRS used 2 commercial planners to identify a site for the conference. These 2 planners were not under contract with the IRS and thus had no incentive to negotiate a favorable room rate. They were paid an estimated total of $133,000 in commissions based on the cost of the rooms paid by the IRS. Rather than negotiate a lower room rate, the planners specifically requested 25 or more VIP suite upgrades with amenities from the hotel, along with a reception with complimentary drinks and daily breakfasts and other refreshments. The agreement with the hotels indicated that a total of 132 suite upgrades were provided each night by the 3 hotels. For example, the commissioner and deputy commissioner for the Small Business Division stayed multiple nights in presidential suites at the hotels. Other examples of questionable spending for the conference include planning trips costing $35,000, 2 video productions which were shown at the conference. Local employees were authorized to stay at the hotel at an expense of $30,000. $44,000 in travel costs were incurred for employees to staff booths in an exhibition hall. Gifts and trinkets were given to IRS employees costing $64,000, and $135,000 were expended for outside speakers, one of whom was paid $17,000. This speaker created 6 paintings at 2 sessions. 2 of the paintings were given away at the conference, 3 were auctioned off for charity, and 1 was reported by the IRS as lost. In addition to this audit, TICTA conducted other reviews of individuals related to the conference, which focused on potential misconduct. Although the details of our actions are confidential pursuant to Title 26, Section 6103, subsection B2A and F of the Internal Revenue Code, we did refer an issue to the Internal Revenue Service for consideration of administrative action. Overall, our review of this conference did not uncover any criminal violations. In conclusion, it is worth noting that the IRS conference spending, as was pointed out, dropped over the 3-year period from a total of $38 million in 2010 to $5 million in 2012. This was due in large part to increased oversight and controls instituted at the IRS. We did make further recommendations to tighten controls, and the IRS has agreed to all of our recommendations. Chairman Issa, Ranking Member Cummings, members of the committee, thank you for the invitation to appear.
Thank you. Mr. Coons?
I have nothing to add. I look forward to your questions, Mr.
Thank
Chairman.
you. Mr. Fink?
Chairman Issa, Ranking Member Cummings, members of the committee, my name is Ferris Fink. I am the Commissioner of the Small Business Self-Employed Division of the Internal Revenue Service. I appreciate the opportunity to appear here today. I have worked for the Internal Revenue Service for 32 years, starting as a Grade 7 Revenue Officer in Ohio. I became the Commissioner of the Small Business Self-Employed Operating Division in May of 2011. I am proud to be an IRS employee and serve alongside thousands of dedicated public servants who administer our tax laws. My division has 24,000 employees, and it accounts for the majority of the $50 billion that the IRS collects in enforcement revenue each year. The meeting we held in 2010 was to train 2,600 managers from 350 offices across the country. We needed to ensure that they had the tools to lead their employees and adapt to major changes that were occurring. At the time of this meeting, almost 30% of our managers were new or had only been managers within a 2-year period. Another focus of the meeting was employee safety. There had been a substantial increase in the number of security threats against employees of the Internal Revenue Service. I think it is important to point out that in carrying out this 2010 meeting, we followed IRS and government procedures that were in place at the time. The Treasury Inspector General's Office review found no instances of fraud, but we're now in a very different environment, and there are many new procedures in place at the IRS governing training and travel. In hindsight, many of the expenses that were incurred in this 2010 conference should have been more closely scrutinized or not incurred at all, and were not the best use of taxpayer dollars. Given the new procedures and restrictions and spending, we would not hold this same type of meeting today. Mr. Chairman, that ends my statement, and I would be happy to answer any questions.
Thank you, Mr. Fink. I need to announce for both the witnesses and the folks on the dais that we expect votes momentarily. It will be a long series of votes. We could be gone for up to an hour. So I would ask the witnesses, we'll make room available back there for you. We will come back immediately.
All right, we're going to come out of this for just a moment here, but let me give you some of the highlights, okay? That was Mr. Ferris Fink, who is a career employee with the IRS. He basically said that they needed to spend $38 million on conferences in 1 year because they had to get all their employees up to speed because there was a lot changing at the IRS, and they needed to make sure everybody was in the loop and understood the new programs and procedures that they had. Also, he said they were concerned about employee security. That there were threats against IRS agents, so everybody needed to get on planes and go to these hotels so that they could get together and be told what the new procedures would be to protect their safety. I mean, you know, the stuff that we are hearing, some of which had been out there, but to hear it brought forth in this congressional hearing about, 3 hotels that were needed, presidential suites where this is a picture of the suites they were in, over $3,000 a night. They stayed multiple nights, sometimes exceeding the amount of days that the meetings were held for.
They requested the upgrades.
They requested the upgrades, which I say to you, if the IRS says to you when you're at the hotel, we'd like an upgrade, are you going to tell the IRS, I don't think so. That's not really going to happen.
Back in that hearing now. Darrell Issa.
One of those. It was comped by the hotel after a large bidding on taking virtually every room in the hotel. And I assure you the room rates for our guests were below what the IRS paid in that hotel. Having said that, could we go to the video and then we'll begin with the questioning. I think Mr. Cummings and I both have seen it enough, but for some who have not seen it, I want to get it into the record. And this is a short clip. It won't be the whole thing, but it sets a tone. Lacey, I know you haven't seen this.
Line. You're trying to get ready for Anaheim. Stay in line.
But have you seen Ferris? Where is Ferris?
Attempting to modulate the frequency now. The no taxion's lack of skilled tax leaders has resulted in a widespread case of confusion, uninformed taxpayers, high noncompliance, no strategic vision. I'm afraid without a wealth of skilled leaders, anarchy is spreading across the planet like a virus. Shall I wear a ski cap to cover my ears, Captain?
Nah, your ears are fine. But you gotta loosen up, Fink. Play a little Wii once in a while. That's what I want.
I'm sure many more will watch that, and some will laugh. My questions are, what a surprise, and I'll start with Mr. Fink. What were you thinking? Were you thinking this will never be seen, or were you thinking, how will this look when it is seen? Please start the clock. Please speak close to the mic. We couldn't hear.
Mr. Chairman?
You're not on.
Mr. Chairman, those videos were, at that time they were made, were an attempt to, in a well-intentioned way, use humor, the Star Trek video to open the conference. The dance video was used to close the conference. They would not occur today based upon all the guidelines that exist, and frankly, they were not appropriate at that time neither, Mr. Chairman. And the fact of the matter is it's embarrassing, and I apologize. Those videos, I noticed in the Inspector General's report there is not a clear delineation of the cost of both the videos, but they are embarrassing, and I regret the fact that they were made.
Let me do a follow-up question, because part of the most concerning part of the IG's report is it appears as though at the IRS, both in this and other cases, we can't count on proper accounting of what money is spent on what. There were at least many cases in which people traveled for conferences during this entire period, and as far as I know today, in which if they simply bill it as travel and not as conference travel, then it won't be seen as conference travel. How are we to know, and obviously without receipts and even a missing painting, how are we to know that these kinds of changes have occurred to where there's a auditable train of where money was spent?
Mr. Chairman, to respond to that question, of course, it's already been spoken that there's been many changes at the IRS. One of the changes at the Internal Revenue Service is around the tracking of expenses, around conferences, meetings, and training. For the particular conference in Anaheim, we were only able to track 90% of the costs. There's a variety of reasons that the other 10% were not accurately tracked. It's because people did not use the tracking code that was in place. It's also that folks were on other travel, visiting offices, doing things of that nature, did not use the conference tracking code, and may have charged their expenses to another code for another business purpose.
Well, the reason I ask that is twofold. First of all, if I did it as a business and thus couldn't account for receipts, wouldn't your inspectors say disallowed?
Mr. Chairman, yes, our auditors would look at records. They do have some discretion as far as the reasonableness of the records that are submitted, but we take very seriously the role that we occupy in ensuring that people have the appropriate business records. This here example that you have provided, we only did have 90% of the information as far as the expenditures.
Now, if I were to have local folks get hotel rooms and meals and so on, and not issue a W-2, I made a fairly serious allegation as a layman. I'm not saying that it's the law exactly, but I could characterize it as tax evasion. If a company didn't do it and the employees, particularly let's just say that they're accountants and very knowledgeable of the law, didn't do it, there were no W-2s, no 1099s, essentially no accountability for this revenue that's supposed to be taxed, what would you do in that case?
In that case, Mr. Chairman, as pointed out in the Inspector General's report, you have to look at each situation case by case. And in that particular situation, you would look at the individual facts that existed in that situation. In the matter that you're referring to here is we now have issued W-2s to all of what we characterized as being local travelers after it was brought to our attention by the Inspector General and in their report that we had not appropriately accounted for all the local travelers, sir.
I appreciate that. Mr. Kuntz, I guess I'll characterize it to you. It was not in the tax year in which it was earned, so the employees did not voluntarily file as far as we know. I know that's not available to the public, but the employees didn't take it on themselves, knowledgeable people about taxes, to say, oh, I've got to pay taxes on this. The employer did not issue the required tax statement to itself, if you will. I characterize it as tax evasion because it can't just be swept under the rug. These were knowledgeable parties on both sides, weren't they?
Yes, I mean, IRS did not issue W-2s, and in fact, we found 7 people that they didn't identify that were local that actually traveled, so those would have been some of the ones that didn't get W-2s.
Now, I'm going to just close with one quick question. I know because not only do we have votes, but I want to be sensitive to the time. I've worked with event planners, and whether it was an event planner inside the IRS, which it should have been, or the ones that were hired, there does seem to be a little sleight of hand. They received a commission based on the more that was spent, the more they received, and apparently they, as I understand from your report, they got free rooms for FAM trips, for familiarization trips, while IRS employees paid for the rooms. Again, as far as I can tell, that increased their commissions while lowering their unreimbursable cost. Is that roughly right?
That would be right. IRS also received, I think, 10 comp rooms per night, but most of the upgrade rooms IRS had, they paid the $135 per diem rate for.
And have you done any work to?
All right, we are watching this. We have to take some commercials too, so we'll keep a close eye on it. But one of the points there about Ferris Fink talking about that video called it embarrassing and regretting it. That's the first public comment we've heard from him on that. But this whole idea about 90% of the costs of these conventions being tracked, which left 10% outstanding. And Darrell Issa's phrase of the morning so far on behalf of the IRS, he calls that tax evasion. More testimony coming up in minutes, Martha.